Hello guys, welcome to the Trading Parrot. It's not even 7 AM and I'm recording the update for you guys. I woke up seeing that we managed to overcome 70k and I rushed into my computer to understand what the hell happened with the selling wall. I guess that's the question from everybody this morning. You can see in my Telegram channel, people already asking what happened with it. Same on Twitter and on YouTube. Yesterday I put a video on coin euro trading. The breakout is at risk. There's a heavy wall. I really wanted you to be fully aware of what kind of final boss are we actually challenging. And we talk about not taking profits, but at the very least running with a very tight trailing stop loss, particularly when breaking that 70k. In today's video, we're gonna have a little bit of a dissection of what happened during the breakout with those orders. Have they been executed? Did they sell that amount of Bitcoin? Are they currently in a heavy short and they increase the volume on the top, making it even more attractive to go higher? We're gonna look into some indicators that currently are getting extremely overheated, just like in every big major breakout in the past. But we have to make a stop there to assess the current risk and to understand what is more likely to happen coming next. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And remember, 3 times a week, the evening update, you need to be subscribed to Coin Euro Trading if you want to follow up twice a day with what's going on with Bitcoin. Guys, thanks so much for the likes yesterday. The morning Bitcoin video made it to 354 likes. Let's continue hoping that today's video can get to 400 likes. And the altcoin is doing pretty good, over 120 likes at the moment. And I can see that you guys are doing everything that you can in the comments as well to motivate other people to push the altcoin videos. And as long as we continue doing so, I'll continue to put altcoin videos. Although today I might not be able to put one just because guess what? The nursery is closed today. That's why I'm recording this video very early to make sure that it's out once the monster wakes up. And then I'm gonna spend the day going around maybe to the National Trust Park or something. In the evening, I'll be back to put another update on Bitcoin. Thanks so much for those likes if you appreciate that. People want to know if the bottom is in. Is the 130 million selling wall still on? That is at 9 PM. I guess at that point we were still below it. 70k, oh my god, breakout. If the wall broke at 70k, turns into support, new all-time high this week. Wow, we are at 71.3 now, crazy. That's precisely how I felt. You can see that now October is getting close to the 12%, still less than half of what we did in October in 2020, but getting close to the 14-15% in 2016. Those are 2 years that are equivalent. And you can see that we did a very similar leg than September, but in September we came back down with a move of roughly 10% down. I don't know if October is gonna give us something similar, but as I've been saying, it's typically November, the one that has the last word at the end of the year for what's coming up until March. October is the month that traders pretty much take for granted as a green month, everybody buys. But then in November, if something smells fishy, they can do a big dump. But as you can see, in halving years tends to be up only. Of course, we are in a very special year. Still, we don't see any retail in here. If you're thinking, oh my god, my neighbors are buying Bitcoin, you're crazy. There's no one out there buying Bitcoin. Normal people are making sure that they have enough to pay the rent, to pay the gas, to pay the bills. So who's buying? The ETFs. Institutions are getting richer than ever and they are investing in Bitcoin like if there was no tomorrow. You can see that yesterday they bought 479. And the same with the whales. Big Whale Explorer is telling us that they continue to be in the heavy accumulation area, which, as I said, it doesn't prevent drawdowns like in here or in here. Those are drawdowns pretty significant, even 20%, but the cushion that the accumulation provides tends to be a very positive thing during the period, regardless of those drawdowns. Long-term holders at the moment are just going sideways. They haven't recovered what they sold in late September. Until now, they're just going sideways. And it seems to be that so far, the bullish cross from the 50 daily MA over the 200 is giving a similar effect that it gave in October, actually 1st of November in 2023. Although in this case, it crossed right after the impulsive move of 23%. In this case, it crossed confirmed when it had moved 5%, and the day after it has done another 2%. But guys, we are at $71.160 right now, which is pretty exciting. The megaphone pattern on the monthly, guys, is a waste not to print this and to put it somewhere. The beauty of the weekly megaphone pattern as well, to me, is shocking. Thinking about July times, thinking how cool we be seeing later in the year the breakout, putting all these lines in there, feeling I was just doing something random, trying to please what I wanted to happen, and then seeing it playing out very closely to the original lines that we put in July gives me a sense of achieving a final long project of 8 months talking about a stupid megaphone pattern. So let's try to not get ahead of ourselves and try to just think that this is going to be up only, and let's point out the current risks. Not to drop your coin, not to close your spot beautiful accumulation of Bitcoin back, and not even necessarily to close your swing long, but to be aware of what could attract the price to the downside so you can sniff that intention eventually at some point and decide to take some profits or to fully just close it. It all depends on your risk aversion. We are all different. But we do have a 1000 CME gap from this weekend, starting from 68 pretty much to 67 priced at Bitcoin on exchanges. Remember, on CME, these prices are more expensive. For example, now it's saying $72.55. Whereas on Binance is 71,177. So sometimes it's 200 more expensive CME, and sometimes it's premium. It's almost 800 more expensive at the moment CME, which means, so this is my first area of concern. We are 1 week away from the elections, and any sort of FUD substantial enough can cause the price to fill the gap. Just so you know, right now we are almost 5,000 away from closing that gap. So that is a fall of 7%. If price continues going higher, then that fall can hurt even more. And that is kind of ignoring the fact that we also have a gap at 54K. Last year, we left open the gap at 20,000. So there could be the chance that this year we leave behind the 54. Impossible to know if it's going to stay there next year or if we are going to close it in the bear market or in a couple of days. Impossible to tell. But for the time being, I'm focusing on this one just because it's relatively very close to the price, totally achievable within a couple of days from the moment that fear and greed index enters fear. That's it. It's gone. So if you have your stop losses in here and you're trailing, and is your plan to eventually stop out your position in profit, that's fine. But if you envision big pain coming into there, I personally wouldn't expose that position to that. Another alternative is to hedge with a short, assuming eventually could come there. Remember, there always is the chance that it doesn't get filled too. And yes, guys, good news, because our expectations that MACD wasn't going to have big drawdown, the bearish cross that we experienced on the 25th of October, just a few days ago, so far seem correct. Indeed, today we just confirmed a bullish cross a few days after. This is confirmed on Monday 28th. At the end of the day, I received the signal at midnight on my email. So that is confirmed just 3 days after the bearish cross. And as you can see, in all this range in here, bearish crosses had a huge impact of 20 and over 20%. The only exception is this area where we went sideways a little bit more. We had a double top, and then still we went for that 20% and over drawdown. So seeing that this play out so quickly, it is promising. We are at the top of the range, having a bullish cross. So I don't take those bullish crosses above the zero line as an entry. This is just telling me that there is still a little bit room for upside. but not to enter in here with a freshly new open position. I mean, you're welcome to do whatever you want, but at 67, there is a CME gap. And I'm going to show you a bunch of other indicators at the moment that are very, very heated. The whole move up has been driven by futures, and people are eventually going to take profits. And what no one knows is when they take profits, how low can the price go? So speaking of which, open interest. This is just mental. This is playing out precisely as we were talking in early September. We went to the top of the range to hit the doors of 21 billion, just like we did every single time. But this time we broke above it. We came back. We talk about this support. We hit it. That support was the spring that we were expecting to come back again against the 21 billion. And where are we now? We are at the top at 23.2 billion. We've never been at this open interest. And if you look for any other crypto channel, what every single one of them was telling you is that open interest being very high means just one thing. There has to be a flash in the market and it has to collapse 10 to 20%. That can still happen, guys. But it's different that it happens from 23 and we flash back into 21 and we turn it into support, because that confirms that we are entering a new range, that we are entering into price discovery. See a bull run how open interest really works. Yes, there are many times when open interest gets very heated and it collapses back down. Indeed, 8 months of doing that. But there has to be a moment where there is an exception and you actually break the range of the open interest. It acts as a leading indicator and it opens the door for Bitcoin to follow up and do the same with the price. So to me, waiting 8 months for this and seeing it now on the chart drawn there is just, again, worth another poster somewhere in my room. I don't know if my wife will be happy seeing so many charts in the room. And some relatively good news. Spot kind of woke up in here from minus 501 and it went to 497, right there at the resistance. So basically they were buying in September spot. They reached a top at the end of September, and from the end of September, incredibly, they've been all October selling until they reach this low. Right now, they have bought these last 3 candles on the daily. We started seeing extremely mild buying, and the last 2 candles were a bit more intense until it reached 497, which is the previous level of support of the CBD spot. We need people to buy spot. No spot buy following up or preceding a futures move just means that we are in a ticking bomb, because futures buys a rip like this, they hold on to their profits, they wait for weakness, and they close the position eventually to take the profit and run. Spot tends to be a lot more sticky. They buy and they hold for longer. So now we can see that spot and CBD and future CBD are in confluence, making a similar move. So what matters now is in the upcoming hours, if futures takes profit, if spot also puts a new low in here, confirming that they do not have interest in this. And also open interest broke from the top of an ascending wedge, which is a bearish structure. I'm very surprised that we did this in here, contrarian to what I was expecting, which is to see a rejection in here, the retest, and then the higher high. Seeing this here is unprecedented and is showing a huge amount of greed coming from futures. This is just ridiculous. And I guess many people are buying the rally into the elections. As soon as they hear something that could slightly disappoint people, futures are gonna take profits, a big proportion of them. And hopefully by then, spot will have bought enough ETFs as well and whales to provide a cushion that protects this level now, hopefully now as a new support. So we'd never come back inside the megaphone pattern. If you look at the previous megaphone patterns, once you're off, you should stay away from it. Otherwise, you could cause a failed cycle, which is a cycle that just reaches 70 something and then enters a bear market. You can see in 2013, once we broke the megaphone pattern, we paid a visit to the bull market support band, slightly after, notice that this megaphone pattern is positioned from April to August, way earlier than the one we are experiencing now. This is the shortest megaphone pattern right there in the halving event, spanning from June to August, and in September, we could say late August, it broke out, never came back. The toughest one we have ever had is this one in COVID. As you will expect, it took very long, 392 days to break out, and it had many attempts at the top in a very painful final retest at $4,000 before heading 1,500% to the first top of that bull market in 2021. Again, you can see that you break out in there, it never came back, not even to test the trend line, but it actually used the bull market support band in September and in October as support to continue going higher. So things that we need to pay attention is that the bull market support band has printed a bullish cross last week, which I have forgotten to confirm in the videos, but that is the case now from this Monday, that is confirmed. And that is pointing up. And if the price continues in this trajectory, the bull market support band is going to look something like that. So coming back in here and retesting this and potentially somewhere in here taking the CME gap, if it plays out, it shouldn't surprise us in any way. Weekly timeframes, all oscillators are really happy. We're just approaching the resistance of the yellow line that has been support the full bull market. So all eyes on 64, 63 RSI on the weekly, because that can cause some turbulences, and that is 75k. That makes a lot of sense, guys. At 75k, this is 76.5. We kind of ran out of these big liquidations. So I will expect all the time, if we spend it in here, seeing zigzags to the upside, downside, all over the place, liquidating tens of billions in shorts positions. So thinking that that 75k could provide big resistance, and there is also a chance that that could be the top. I don't want that to happen, but there is a slight chance that that 75 could be the top. Why? Because all this moving here broke the support from this trend line that held us the full bull market. We retested once kind of in here at 58. We have broken out, but this move has a proportion of chances of being a dead cat bounce, just like this one in 2021 was as well. Once we broke this support from this trend line, we did a dead cat bounce and then heading into bear market. So this one in here can also be a dead cat bounce heading into a bear market somewhere here. Of course, if we don't want that, we need to break the yellow line, which we know that at that point there is just price discovery, no more liquidations substantial enough like these red ones that we have in here. So it's going to be a pretty interesting beginning of 2025, seeing what happens there if we haven't yet confirmed a dead cat bounce narrative. And yeah, liquidity pools from scalping have run out. If you go up, there's nothing. So this 70k here wall, we're going to cover it just in a second. I have some insights to share with you that I didn't notice yesterday. And we took all the scalping liquidity at the top. Now we only have scalping liquidity below. When I say scalping, I mean liquidity pools from stop losses and account liquidations that have been formed in the recent price action. Now going into the swing trade, this is a little bit more historic levels of liquidation pools. You can see that we took all the green. And in this rainbow in here at the top, green is low liquidity, blue are the lowest, yellow is bigger than green, and red of course is the largest pools. So we have now taken green and we have slightly larger starting from 72. There is an incentive to get there. And then we start the red, which is the full party on getting shorts to cry to their moms. And we can see that the double bottom formation in here, hybrid with a bull's flag that I was bullshitting yesterday, is playing out. It has done 90% of the target. The target was 71.9 and we have done 71.555. So pretty close. There is some signs here of erosion. At the moment, we'll see if we can complete the full target. Below the price on the scalping chart, I forgot we still have that area at around 65. We have some confluence with 67, but it's still in just blue, meaning that liquidity pools are not very substantial at the same level we have the CME gap, making it slightly less attractive than if this was already in red. Together with the CME gap, that will make a strong case or stronger case for the price to go there and hit. And let's do the magnifier glass on the order book. What happened in the 1 minute time frame on Binance Spot with those huge orders to sell? I remember yesterday that the orders were peaking at 639. And as we approach this, they are still 600, and at some point they get into 730, but this is the 4-hour time frame. So it's very difficult to understand if they got executed. So I'm going to go to the 1 minute time frame and we're going to zoom out, look up for 71 and see how large were the orders at the moment that they got hit. And you can tell that they peak at 346, so no longer 600 and something. More or less half of it was still there 1 minute before impact. And then in here it says 3.7. So of course this is real time in real life. In the chart is all normalized to 1 minute, so there is no way still here I can fully tell you. It will be more reassuring if I saw in here a 200 in the same time that we have the candle visiting that area. In that case, I will tell you, yes, they sold spot for 300, which is half of the liquidity that we were seeing on FAR charts. But there is still potentially a chance that they pull out in the last few seconds and they didn't sell at all. And that will look pretty similar to what they did around January in 2024, which is to place huge liquidity. I think this is 134 million here, that thing in yellow, that was just psychologically causing the price to come back down so they can buy cheaper. But what we can see in here is kind of the same thing. You can see that there is that area in there. It reaches the top, but then once the candle crosses there, it's no longer there. And unfortunately, FAR charts at this level of time frame, which is 6 months, is not gonna help us really to confirm if those orders are executed or not. What we can still see is that all whales were buying at that point. If we go to the 1 day, similar story. We can see that the candle ends there, but unfortunately this cannot really discard if they got executed. So let me know in the comments if you have any privileged information, on-chain data, hopefully that can fully prove that they sold that big amount, or if they were just once again, as we were talking yesterday in Coin Bureau trading, that this could be just for psychological reasons to cause fear and to delay spot from buying. Let's talk about risk. At the moment, you can see that there is a full wall cover in liquidity below the price. That is expected when seeing a breakout playing out. The moment of the breakout to the upside typically puts the largest amount of longs at risk. If they get away with succeeding with the breakout, they don't take any bullets and it's a win for them. It's a battle. So risk is at the top high. And you can see, guys, that in the last 8 months, we never been in the chart of the fair value gaps with no fair value gaps above the price. We took all of them at the top, and right now we only have fair value gaps to the downside. And that is the case on any breakout. If we go back in past here, when we were in January breaking out there, you can see that we actually leave all these fair value gaps in history non-taken. They span to 40K, and we only took the ones that reach up until 49. These ones in here are leftover from the previous breakout. So if this breakout succeeds, we might get away with leaving most of these ones untaken. That is considered normal. But in my opinion, the low-hanging fruit up until 67 has the highest likelihood of still seeing the price coming back and taking it. It's a lot more bullish if we don't, but it leaves me with a lot more confident feeling if we do, because we have the CME gap there. And it's nice to see that the price is moving in a balanced way, and with every high, it puts a low, closes gaps, and leaves a strong foundation for continuation. That is just a matter of preference, not necessarily what Bitcoin is going to decide doing. And at the moment, as you will expect at this point in time, the delta is record high, meaning that longs are at a big risk of liquidation with 379K. You know, the range that we were talking about these days were around the 100K and below 100K for shorts and longs. Now, longs being 4 times that, showing so many liquidation levels below the price. It is the highest risk ever, but once again, let me repeat it, that's the typical scenario when you are seeing a breakout after 8 months. And here is the liquidity above the price that is explaining why this still runs and why we bother taking all that risk. Guys, tonight's update is going to be in the evening and on the Trading Parrots channel, so I'll see you there. And if you're looking for an exchange top notch, the one I use for my trades and for my trading bots as well is Bybit. If you use the link in the description to open a new account, you can claim up to 30,000 in rewards based on trading volume. The beauty of Bybit is that it works with pretty much all trading bots platforms. If you struggle to open an account where you live, we also have links in the description to open a Palau digital residence that you can get in 1 week at home and then use to open a Bybit account to trade with bots. With your Bybit account, using my referral link, you can get access to all the perks in my community, including over 100 indicators on PineScript. But if you really need to open an exchange very quickly, no hassles, no KYC, just 2 minutes to get to trade in a snap, then consider bluffing. I have a link in the description that offers 10,000 in bonuses subject to trading volume as well, the lowest fees to trade, and indeed any product that you decide to use from the description is supporting the channel to continue putting 2 and 3 videos per day, every day. Well, with the exception of the weekend where I put just 1 per day, but still. Guys, I'll see you tonight. Wish me luck. I'm babysitting all day. I'll see you later. Bye bye.